Okay, let's unpack this. Today we're diving deep into a really fascinating saga. It's been playing out in the financial world for, well, half a decade now. Michael Saylor's strategy, you might remember them as MicroStrategy, and their truly incredible journey with Bitcoin.
It really is something else.
We've got some fresh data. There's this 5-year milestone to chew on, and trust me, it's just full of surprising facts and honestly an almost unbelievable level of conviction. So our mission in this deep dive is to really unpack the significance of this remarkable 5-year anniversary. Strategy adopting Bitcoin as a primary treasury asset. That was huge.
Absolutely.
We'll get into the precise details of their latest acquisition, and then we'll kind of zoom out, look at the broader implications of their unwavering, almost relentless accumulation strategy. Especially for you, whether you're just curious or maybe you're an astute investor trying to navigate today's financial landscape.
And what's truly fascinating here, I think, is that Strategy's approach isn't just about, holding an asset. It's a declared ongoing strategy, and it's evolved quite significantly over these 5 years.
Right.
It really invites us to consider its profound impact on the broader institutional view of digital assets. This isn't some passive, oh, let's buy some Bitcoin kind of thing.
No, not at all.
It's an active, programmatic deployment of capital. And they started it during a period of immense global uncertainty, which makes it such a unique and powerful case study in corporate finance and, strategic asset management.
Their approach definitely stands out. But, when we talk about a company like Strategy, they're a software analytics firm, fundamentally not a bank or investment house.
Yeah.
What exactly makes their continued accumulation so unique, even 5 years down the line?
That's a really crucial distinction, actually.
And what specific things about their philosophy just fly in the face of conventional treasury management?
Well, think about most corporate treasuries. They're designed primarily for capital preservation, right? And liquidity.
Yeah, keep the cash safe.
Exactly. They hold cash, short-term government bonds, maybe some highly liquid money market funds, stuff that offers minimal yield, but, maximum perceived safety.
Very conservative.
Very. Strategy, though, under Michael Saylor, they fundamentally reevaluated that whole paradigm. They looked around and identified Bitcoin as, in their view, a superior store of value.
More than cash.
Yeah, and a hedge against inflation, plus a long-term growth asset. They started talking about it as a digital equivalent of gold, but potentially with far greater upside.
Okay.
Now, that perspective directly challenges the traditional CFO's mandate, which usually prioritizes avoiding volatility at almost any cost.
Right. Volatility is the enemy usually.
Precisely. So their uniqueness comes from that core conviction, first of all, but then it's coupled with this unprecedented scale, we'll get into the numbers, and an unwavering commitment to just keep buying. Continuous accumulation. They've essentially turned their balance sheet into, almost a de facto Bitcoin fund.
It's incredible. Okay, let's start right at the beginning then. The origin story of this really groundbreaking strategy. Cast your mind back, if you can, to a specific date. August 11th, 2020.
I remember it well.
That was the day Strategy made its first truly monumental entry into the Bitcoin market. Can you set the scene for us? What was the sort of broader economic and market context around that decision? Why was it such a bold move right then?
Yeah, August 2020. It was a fascinating time and deeply uncertain. We were really in the thick of the first phase of the COVID-19 pandemic.
Right. Lockdown, stimulus.
Exactly. Central banks everywhere had unleashed just unprecedented quantitative easing, basically printing vast sums of money to try and stimulate economies.
Yeah.
And this led to widespread concerns about inflation, naturally, and the debasement of fiat currencies,
Right.
Government money like the US dollar, not backed by gold or anything physical anymore. So corporate treasuries found themselves sitting on increasingly large piles of cash that was rapidly losing purchasing power in this environment and earning next to nothing in bank accounts because interest rates were rock bottom.
A real problem for CFOs.
A huge problem. Now, against that backdrop, Bitcoin, it was recovering from the big crash in March 2020, the Black Thursday event.
Oh, yeah.
But it was still largely seen by traditional finance as, a volatile, speculative asset. Or even worse, some still associated it with illicit activities. Its price was hovering around $11,400.
Seems so low now.
Doesn't it? So for Strategy, a software company, to step in and make a $250 million bet specifically, buying 21,454 Bitcoin for $250 million, that wasn't just audacious, it was frankly revolutionary.
It really sent shockwaves, didn't it?
It did. It signaled this profound shift in thinking about corporate treasury. moving beyond just preserving capital to actively seeking capital appreciation, using an asset that most corporate boards probably wouldn't even touch, let alone discuss seriously. It truly set a precedent. It started to shift the whole conversation around how corporate treasuries might operate beyond just bonds and cash.
So, yeah, it wasn't just a big purchase. It was like planting a flag,
Yeah.
a philosophical statement. And this was happening when, like you said, most companies were just trying to figure out remote work or maybe cutting costs.
Exactly.
And the fact that this latest buy we're going to talk about coincides precisely with this 5-year anniversary.
Yeah.
That can't just be a coincidence, right? It feels deliberate.
Oh, absolutely deliberate, I'd say. This 5-year mark isn't just some arbitrary date on the calendar. It signifies a sustained, disciplined strategy.
Right.
So the recent acquisition isn't merely another transaction in the logbook. It underscores this deep, ongoing commitment to the vision. It proves it wasn't just a one-off, opportunistic investment back in 2020.
It's proof of the strategy itself.
Precisely.
Yeah.
If you connect this to the bigger picture, it demonstrates an enduring conviction in Bitcoin's role as a treasury reserve asset. Think of it almost like a proof of concept for the entire corporate world. Can a publicly traded company successfully integrate Bitcoin into its core financial strategy? What are the long-term effects? Strategy's answer, through 5 years of consistent action, has been a resounding yes.
And that starting price point you mentioned, $11,400, that's the crucial context for understanding the dramatic returns we're going to get into later. It really shows the transformation.
Absolutely. It sets the stage perfectly.
Okay, so this isn't just ancient history. It's an ongoing, active strategy. Strategy just added another $18 million in Bitcoin to their, frankly, colossal stash. This happened during the week ending Sunday, right before they filed with the SEC on Monday.
Mm-hmm.
Now, for those maybe less familiar, an SEC filing, that's a public document, right? Companies have to submit them to the Securities Exchange Commission here in the U.S. It details their finances, significant actions like these buys. It's all about transparency for investors.
That's right. Standard procedure for public companies making material moves.
So walk us through the specifics of this latest buy. $18 million sounds like a lot, but what do they actually get?
Certainly. So this latest acquisition involved Strategy purchasing 155 BTC.
155 Bitcoin.
Correct, for approximately $18 million. Now, the interesting part is the average price they paid, 116,401 per coin.
Wow, okay, so high prices then.
Very high prices. To give you some context, Bitcoin started that week around $114,000, and then it actually neared its all-time highs, touching around $122,000 by the Sunday.
So they bought near the peak of that week.
Effectively, yes. Their average price was $116,401. And this raises an important question, doesn't it? Buying at that average while BTC was peaking. It really suggests a commitment to their schedule, their plan, rather than trying to time the market perfectly.
Right, not trying to buy the dip necessarily.
Exactly. It reinforces this idea that for strategy, it's about continuous programmatic accumulation. They're essentially dollar cost averaging.
Can you quickly explain dollar cost averaging for anyone who might not know?
Sure. It just means investing a fixed amount of money at regular intervals, regardless of the asset's price at that moment. So sometimes you buy high, sometimes you buy low, but over time, it averages out your purchase price.
Right.
It helps manage the risk of putting all your money in at, the absolute worst time. And for a corporation this size, it also minimizes those internal debates about, is now the perfect time to buy?
Ah, that makes sense. Takes the emotion out of it.
Largely, yes.
So they're not waiting for a pullback, not trying to predict the market's next zig or zag. They're putting capital to work even when Bitcoin is touching or very near its all-time highs. What does that tell us about their overall approach? Is it just pure, unwavering dollar cost averaging, or there maybe a more nuanced calculation when they buy at these really elevated levels?
Well, I think it speaks volumes about their internal models and their long-term projections. Many retail investors, even some institutional players, they often try to time the market, right? Look for those perfect entry points.
Everyone wants to buy low, sell high.
Naturally. But Strategy's consistent buying, seemingly regardless of price, signifies a very high degree of confidence in Bitcoin's long-term trajectory and its role as a strategic asset for them.
Okay.
So for them, current price points, even if they seem high to us right now, are probably still viewed as opportunities relative to where they think it's going years down the line.
So they still see it as undervalued long-term, even near all-time highs.
That seems to be the implication. It could be interpreted as this powerful statement of conviction. Even at these prices, we believe Bitcoin is undervalued in the grand scheme, and our strategy dictates we keep accumulating because we foresee a much, much higher value eventually.
Hmm.
It minimizes that emotional component of investing we talked about and replaces it with a disciplined, almost automated approach. It's quite mechanical in a way.
Like a template, maybe?
It could be seen that way, yeah. A template for how a large entity, be it a corporation or someone else, can accumulate a volatile asset without getting caught up in short-term market noise or trying to predict the unpredictable.
It really is fascinating how they maintain that discipline on such a grand scale. I mean, it's one thing for you or me to dollar cost average a few $100 a month, right?
Yeah, it's simpler.
But for a public company to consistently deploy millions, sometimes tens of millions, even during periods of extreme price run-ups, that truly sets them apart. It fundamentally shifts the perception, doesn't it? From Bitcoin being just a speculative gamble to, well, a strategic long-term hold. At least in the eyes of one of its most prominent corporate backers.
Absolutely. It reframes the conversation entirely.
Okay, beyond those specific buys, let's zoom out again. Let's talk about the sheer scale of Strategy's total commitment. Can't you even wrap your head around these numbers? Give us the big picture.
It is genuinely mind-boggling when you look at the totals. As of this latest acquisition, Strategy's total Bitcoin holdings have reached, get this, 628,946 BTC.
Wow. Over 600,000 Bitcoin.
Over 600,000. And to put that in dollar terms, the total cost of acquiring those holdings is approximately $46.1 billion.
Billion. With a B.
Billions with a B. That's the money they've spent over 5 years accumulating this position. And crucially, their average acquisition price across all these purchases, which determines their overall profit or loss, stands at $73,288 per coin.
Okay, $73,288 average cost.
Correct. And based on these numbers, Strategy has unequivocally positioned itself as the world's largest public holder of Bitcoin. There might be private entities or governments holding more, but among publicly traded companies, they are number one.
It's not just an investment line item on their balance sheet, is it? It's a core identity now, a commitment that, like you said, dwarfs many sovereign wealth funds or even national gold reserves in terms of sheer capital deployed into this one asset class.
It really does. The scale is enormous.
So that kind of scale, it can't go unnoticed in the market. How does having such a large public holder influence perception? And what about stability in the Bitcoin market itself? Are they seen as a whale that could rock the boat or more like a stabilizing anchor?
That's a great question. And honestly, it's probably a bit of both. On one hand, yes, their sheer volume means their buying activity. And hypothetically, any selling activity, though they haven't sold, could certainly impact market dynamics if they suddenly changed their strategy.
If they started dumping, yeah, that would make waves.
Huge waves. However, because their strategy has been so consistently buy and hold, they are largely perceived, I think, as a stabilizing force, a reliable source of demand rather than a speculative trader flipping coins.
A constant buyer in the market.
Pretty much. Their continued accumulation, even at high prices, like we just discussed, signals strong bullish sentiment from a major institutional player. That can definitely impact broader market psychology. It might even encourage other large players who are on the fence to finally jump in.
Kind of like a lead domino effect.
Could be. It also provides this fascinating, very public case study for other corporations, especially those grappling with inflation eating away at their cash reserves, or those looking for uncorrelated assets to diversify their balance sheets.
So for Strategy, Bitcoin isn't just an asset they own. It's core to their corporate strategy, right there on the balance sheet. Although I imagine there are complexities with accounting for such a volatile digital asset.
Oh, definitely. Accounting rules haven't fully caught up, which creates its own headaches. But yes, it's prominently featured.
It certainly makes other companies sit up and take notice, doesn't it? When you have a public company with Strategy's market cap, committing this kind of capital and doing it transparently with audited financials, SEC filings, it adds a layer of legitimacy to Bitcoin that perhaps traditional finance struggled to accept before.
Absolutely. It moves Bitcoin from the fringes, maybe, towards being a serious contender for corporate treasury diversification. It's not just about making money, though they certainly have, as we'll see. It's about a fundamental reevaluation of what constitutes a valuable reserve asset in the 21st century.
It's a challenge to the old ways.
It really is. It challenges that conventional wisdom that corporate treasuries should only hold cash, short-term bonds, those super safe, low-yield assets.
Right.
Strategy is actively demonstrating that, well, maybe a portion of a corporate treasury can be allocated to a growth asset that also acts as a hedge against inflation and currency debasement.
That's a profound shift in thinking.
It is. And if they continue to be successful over the long term, it could genuinely set a new precedent for finance departments globally. It's like a live experiment playing out on a multi-billion-dollar scale, forcing traditional analysts to grapple with totally new valuation models and risk assessments for this asset class.
Okay, so at the heart of this colossal strategy, there's this remarkably simple yet incredibly bold philosophy. It comes directly from Strategy's co-founder, Michael Saylor. He really seems to have meant it when he said, and I think this quote captures it all, if you don't stop buying Bitcoin, you won't stop making money.
It's quite a statement.
It really is. It encapsulates their entire approach. It's like a mantra that they've put into action with just incredible consistency. But how does a statement that sounds maybe a little simplistic translate into such a complex, multi-billion-dollar corporate strategy?
Yeah, it does sound simple, but it raises an important question about the psychology behind it, right? Especially that psychology of long-term conviction versus chasing short-term gains, particularly in a market as notoriously volatile as Bitcoin's.
Right.
Saylor's philosophy, I don't think it's just a catchy phrase for him. It seems rooted in a very deep, almost academic belief in Bitcoin's fundamental properties.
Like what specifically?
Things like its provable scarcity, only 21 million ever, its decentralized nature, nobody controls it, the robustness of the network itself, and its potential, in his view, to become a global reserve asset, a kind of digital energy, as he sometimes calls it.
Digital energy, interesting.
Yeah, he views Bitcoin through the lens of information theory sometimes, seeing it as this pristine, secure form of digital property. And that foundational belief allows him and the company to essentially disregard short-term price swings and just focus relentlessly on accumulation.
Tune out the noise.
Pretty much. If you connect that to the bigger picture, it challenges traditional asset allocation models. It suggests an asset like Bitcoin can serve as both a store of value, like digital gold, and a significant growth engine for a corporation. His vision isn't just about the next market cycle, it seems to be about a multi-decade adoption curve.
And the proof is in the pudding, as they say. The quantitative evidence of this philosophy is undeniable. Strategy has, quite literally, never stopped buying BTC since that first purchase in August 2020.
That's the track record.
They've made over 74 separate purchases, regardless of market highs, market lows, all the wild volatility Bitcoin has thrown at investors over the past 5 years. That is just incredible discipline. 74 distinct buys.
It really is remarkable consistency.
How do they even fund these continuous purchases? It can't all be from their main business, can it?
That level of consistency is rare anywhere, let alone in crypto. Saylor's long-term vision isn't just talk, it's backed by serious, continuous capital deployment. They've used various methods. Some of it is from free cash flow generated by their core software business, but they've also been quite strategic in raising capital specifically for Bitcoin buys. They've issued convertible notes quite often.
Which are like bonds that can turn into stock.
Exactly. Corporate bonds that can be converted into company stock under certain conditions. Very popular way for them to raise funds. And they've also done direct equity offerings, selling new shares of the company.
So they're using financial engineering specifically to buy more Bitcoin.
Absolutely. The never stop buying mantra is deeply integrated into their corporate finance operations. He even pledged again late last year in 2024 to keep buying no matter how high it surges.
Wow. No price is too high, apparently.
That seems to be the stance. And perhaps even more audaciously, back in June, he doubled down on his really long-term Bitcoin price forecast. He predicted that BTC is going to hit, wait for it, $21 million per coin in the next 21 years.
Okay, hold on. $21 million per Bitcoin. That's a mind-boggling figure.
It is an extremely bold prediction, yes.
It really prompts you to think, though. If a corporate leader with billions of dollars on the line is making predictions like that and backing it up with continuous multi-million-dollar purchases,
right,
what does that mean for, the everyday investor or someone just trying to learn about this space?
Right.
Does it legitimize the asset in a way nothing else really has?
Okay.
Does it provide some kind of roadmap for others, whether it's small businesses or huge institutions, on how to approach this emerging asset class?
I think it absolutely legitimizes the asset in a way that, say, anecdotal stories or internet hype never could.
Because it's real corporate action.
Exactly. Strategy success, their track record, it provides a tangible, publicly verifiable example that other institutions can point to. Think about a CFO today, maybe considering a Bitcoin allocation. They can now look at Strategy's audited financials, their public SEC filings, a 5-year history of a major public company successfully accumulating Bitcoin.
It's data they can analyze.
Precisely. It creates a quantifiable track record that traditional risk committees and boards can actually analyze. They can move beyond just hearing about it, beyond regulatory uncertainty maybe, to actually modeling Bitcoin as a potential treasury asset. It's the difference between, say, hearing about a new technology and seeing it successfully deployed at scale by a major company.
That makes sense.
Furthermore, it implies that for Saylor and Strategy, Bitcoin isn't just some speculative bet. It seems to be a strategic, fundamental pillar of their future financial health and growth. And that could fundamentally alter how corporate treasuries are managed in the decades ahead, moving from purely conservative, capital preservation-focused models to ones that maybe incorporate strategic, high-growth, inflation-hedging assets like Bitcoin.
It really makes you consider if this is just an anomaly, an outlier that maybe can't be replicated easily, or if it's actually the start of a much larger trend in corporate finance. The sheer audacity of the vision, plus the disciplined execution.
Yeah, that's what makes this deep dive so compelling. Agreed. It's a fascinating intersection of technology, finance, and corporate strategy.
Okay, now for a bit of a twist. You might expect, logically, that adding another $18 million to their Bitcoin stack, especially right on their 5-year anniversary, would be met with, universal celebration from the crypto community and observers.
Seems logical.
Given all the impressive numbers we've just been discussing, you'd anticipate applause, right? But interestingly, this latest acquisition, despite being part of this milestone, actually disappointed many observers.
Yeah, that reaction was noticeable.
That's quite a surprising reaction, isn't it? Why would an $18 million Bitcoin purchase be seen as anything less than positive by some people?
It is a fascinating disconnect, isn't it? And I think it highlights how much market narratives and expectations can sometimes diverge from a company's actual strategic execution.
How so?
Well, the market, especially the crypto market, often craves those big, dramatic, headline-grabbing moves. Remember when Strategy made that massive acquisition of over 21,000 BTC back in July?
Yeah, that was huge.
That was a figure that really moved the needle on their total holdings, made big news. In comparison, 155 BTC, even though it cost $18 million because the price was high, sounds modest, right?
Just the number 155 versus 21,000.
Exactly. So this disparity between the expectation of these massive, maybe ever-increasing buys and the reality of their consistent, sometimes smaller programmatic purchases that can lead to this sense of disappointment among some observers.
So it's not that $18 million is insignificant, it's the number of coins relative to past buys.
Precisely. It's relative to their own historical benchmark of much larger acquisitions, which some in the community have perhaps come to expect as the norm for Strategy.
And the criticism was pretty blunt. Nick Puckrin, who founded Coin Bureau, a popular crypto resource, he didn't mince words. He commented directly on Saylor's announcement on X, saying, and I'm quoting here, "Only 155 BTC. Looks like you need to raise more fiat."
Ouch. Yeah, pretty direct.
That's a pretty strong reaction for an $18 million purchase, isn't it?
Yeah.
What does that comment really imply about how the critics see Strategy's funding or their overall approach?
Well, I think it implies perhaps a slight misreading of Strategy's long-term systematic accumulation plan.
Okay.
Puckrin's comment kind of suggests that he views Strategy's acquisitions as being purely opportunistic, maybe driven only by these large capital raises, rather than as a continuous deployment of whatever funds become available. While Strategy has certainly raised substantial capital through those convertible notes and equity offerings specifically to fund big Bitcoin purchases, their strategy isn't solely dependent on those blockbuster raises.
They still have their main business generating cash.
Exactly.
Yep.
They also consistently deploy free cash flow generated from their core software business. So the idea that they need to raise more fiat kind of overlooks that steady, methodical accumulation using operational cash flow, which is central to their dollar cost averaging strategy.
So it suggests an expectation that they should always be making huge headline buys, which isn't always feasible or even the plan.
Right. It implies an expectation of constant spectacle, perhaps, which doesn't align with the disciplined long-term accumulation strategy.
Okay, so it really is about context then. If you compare this 155 BTC buy directly to, say, that 21,021 BTC purchase back in July, which was, what, over 130 tons larger just by the number of coins? Yeah, the recent acquisition feels much lighter.
Dramatically lighter in BTC terms, yes.
So it makes sense why some might feel it's not as impactful, especially if they're used to strategy making headlines with buys in the thousands or even tens of thousands of Bitcoin. It really does highlight those sometimes unrealistic expectations within the crypto community, doesn't it? Where maybe every acquisition is hoped to be bigger than the last, even though the company itself is clearly sticking to a dollar cost averaging plan, regardless of the current price.
Exactly right. It's largely a perception issue, I think, rooted in maybe a misunderstanding of their underlying methodical process. For a company like Strategy, with holdings now worth tens of billions, a purchase of 155 BTC, while still a huge amount of money for almost anyone else, is proportionally a much smaller addition to their overall portfolio now.
Yeah, a drop in the bucket for them, relatively speaking.
Relatively, yes. It reveals that tendency in the market to focus just on the absolute numbers sometimes, rather than the strategic intent or the underlying consistency. It also might suggest that some observers expect Strategy to be perpetually buying the dip or making these big opportunistic moves, rather than just disciplined scheduled purchases. That short-term focus really clashes with Strategy's stated multi-decade vision.
That makes a lot more sense now. Okay, so it's easy to get caught up in those big numbers and the headline buys, but it's crucial to remember, like you've been saying, that this 155 BTC acquisition isn't actually their smallest dip into the market.
Not by a long shot, actually.
Right. While it might seem modest compared to some others, it's not the smallest in Strategy's history, but comes very close. They've actually done even smaller buys, both in terms of Bitcoin volume and dollar value. That helps put this recent acquisition into a much more accurate perspective, doesn't it?
It absolutely does. If we connect this back to the bigger picture, these smaller purchases really underscore the dollar cost averaging aspect of their strategy we discussed.
Right.
It implies that steady programmatic approach rather than just big, sporadic, market-moving buys. Can you give us some examples?
Yeah, for instance, their smallest Bitcoin purchase, just by the number of BTC bought, was actually back in March of this year. They bought a mere 130 BTC then.
Only 130. Okay.
Although that cost $10.7 million because the price was different then. And if you look at the smallest purchase by dollar value, that was back in November 2023, they spent just $5 million.
$5 million, okay.
And interestingly, that $5 million bought them 155 BTC, the exact same quantity as this recent disappointing purchase that cost $18 million.
Huh, isn't that interesting? Shows you how much the price has moved. But yeah, those instances clearly show a pattern. They deploy available cash flow consistently, pretty much regardless of how much Bitcoin that specific amount of capital can acquire at whatever the price is that day.
So it's not just about the absolute amount of Bitcoin they get each time, but the consistent deployment of cash, even if it's in these smaller increments sometimes. What's the strategic thinking behind doing these smaller but still consistent buys? Is it just about maintaining presence? Deploying cash flow? Maybe avoiding moving the market too much?
I think it's very likely a combination of all those factors, and it really speaks to, well, intelligent corporate finance tailored to this specific strategy.
Yeah.
First, it's definitely about deploying available cash flow as it becomes accessible from their main business operations, rather than letting that cash sit idle in low-yielding assets where it's losing value to inflation.
Use it or lose it, essentially.
Kind of, yeah. Waiting for some ideal market condition that might never come, or trying to accumulate huge sums for one single massive buy that actually goes against their never-stop-buying philosophy and, like you said, exposes that cash to inflation risk. Second, this kind of continuous programmatic buying, often in smaller chunks relative to their total holdings, minimizes the market impact from any single large buy. That's important for a player of strategy size. They don't want to inadvertently drive the price up sharply against themselves every time they want to buy.
Smooths out their entries.
Exactly. And third, it aligns perfectly with that dollar cost averaging principle. It smooths out their average purchase price over the long haul and reduces the risk that comes with trying to perfectly time market peaks and troughs. It's really about methodical accumulation, not about putting on a show.
Yeah, not about the spectacle.
Right. It demonstrates that their commitment is unwavering, whether they're buying thousands of Bitcoin in one go or just 100 or so. This disciplined, almost you could say boring consistency, that's a hallmark of their long-term conviction. And it contrasts so sharply with the often speculative, hype-driven nature of the broader crypto market. They're clearly not trying to make a quick buck here. They seem to be building a generational treasury.
That distinction feels really key. It's a methodical, strategic process, not just a series of grand headline-seeking gestures. And understanding that nuance is pretty essential for anyone trying to really grasp the depth of Strategy's Bitcoin bet, whether you're a serious investor looking at their financials or just someone curious about how corporations might adopt digital assets.
Couldn't agree more. The consistency is the story.
Okay, let's shift gears a bit then. Let's talk about the impact, the bottom line. What does all this mean for Strategy's actual financial performance, for the company itself, and ultimately for their shareholders? The numbers, when you look back over 5 years, are truly astonishing. Can you quantify that success for us?
Yeah, the returns are frankly staggering. It's undeniably a success story from a financial perspective so far. Remember, they started buying in August 2020? Since then, the price of Bitcoin has surged an astounding 960%.
960%.
960%. Let that sink in. From around $11,400 when they first bought in to roughly $120,000 where it's trading around the time we're recording this. That kind of appreciation on a multi-billion-dollar investment, it's simply unprecedented in the world of traditional corporate treasury management.
Just unheard of.
Absolutely. So given their total investment cost was about $46.1 billion for those 628,946 BTC, well, do the math. The current market value of those holdings would be somewhere around $75.5 billion.
$75 billion worth of Bitcoin.
Roughly, yes. Which represents a truly massive unrealized gain of nearly $30 billion on their initial investments.
$30 billion
Yeah.
unrealized, meaning they haven't sold to lock it in yet.
Correct. It's paper profit for now, but it reflects the current market value versus their average cost basis.
It's not just a difference, it's like a paradigm shift compared to traditional returns. Most corporate treasuries, they'd be thrilled with a few percentage points a year, right? Maybe just keeping pace with inflation if they're lucky.
Exactly. They're aiming for safety and low single-digit returns usually.
Strategy, meanwhile, has generated returns that are just in a completely different galaxy. For context, what did traditional markets do over that same period, like the S&P 500?
Well, the S&P 500 returned maybe somewhere in the ballpark of 70–80% over that same 5-year time frame, which is good.
Good, but not 960%.
Not even close. And short-term corporate bonds, you'd be looking at very low single-digit total returns over 5 years. So this kind of performance on such a significant scale, it really validates Michael Saylor's bold vision in a way that just words never could.
Turns the gamble into genius, maybe.
Well, it certainly turns what many viewed as a highly risky gamble into, at least so far, a highly successful, albeit unconventional financial strategy. But it hasn't been a perfectly smooth ride, has it? What about the challenges? How have these massive, often unrealized gains impacted their reported financials day to day, and the volatility must cause headaches?
It provides a really compelling, real-world example for other CFOs, other corporate boards who are sitting there grappling with the declining purchasing power of their own fiat currencies, and maybe looking for alternative asset strategies.
Right. Strategy's demonstrable success really challenges that deeply ingrained conservatism of traditional corporate treasury management.
And the challenges. Accounting, volatility.
Oh, absolutely. The journey hasn't been without major challenges, primarily due to accounting rules, actually. Current U.S. accounting rules treat Bitcoin as an indefinite-lived, intangible asset.
Okay, what does that mean practically?
Practically, it means its value on the balance sheet is only adjusted downward for impairment if the price drops significantly below their cost basis. But crucially, it's not adjusted upward for appreciation until they actually sell it.
So the gains don't show up on the books until they sell, but the losses can hit their earnings.
Exactly. It creates potential volatility on their reported financials. If Bitcoin's price drops significantly in a quarter, they might have to take large non-cash impairment charges. These can make their quarterly earnings look quite poor on paper, even if their long-term strategy remains perfectly sound and the Bitcoin price recovers later.
That sounds frustrating.
It definitely complicates their financial reporting. However, I think the market, especially investors who follow them closely, largely understands this accounting nuance by now. While they certainly face pressure during sharp Bitcoin downturns or bear markets, Saylor's unwavering commitment and clear communication have generally built significant investor confidence over time.
So the market looks past the accounting quirks.
To a large extent, yes. They focus on the underlying Bitcoin holdings and the long-term strategy. This whole saga, the success story, it will undoubtedly be studied for years in business schools. It highlights how, under certain specific circumstances and maybe requiring a leader with exceptionally high conviction, a significant allocation to a volatile but potentially high-growth asset like Bitcoin can dramatically enhance shareholder value over the long term.
A real-world experiment with huge implications.
Okay.
Okay, looking beyond Strategy's own balance sheet then, what are the broader implications of them being such pioneers? They haven't just invested in Bitcoin. They've become this highly visible, very public example of corporate Bitcoin adoption.
The poster child in some ways.
Yeah, exactly. How has their success and their very public commitment influenced other companies? Public ones, maybe even private entities. Have we seen others start to consider Bitcoin for their own balance sheets because of Strategy? And how do they set a precedent for things like corporate governance and accounting around digital assets?
Yeah, what's fascinating here is definitely the ripple effect. Strategy's public commitment and, crucially, their demonstrable returns, they provide this powerful case study for other institutions that might have been hesitant.
Reduces the career risk for other CFOs, maybe?
That's a big part of it, yes. It significantly reduces the perceived risk associated with Bitcoin by showing that a major publicly traded company can not only survive, but actually thrive by integrating a volatile asset like Bitcoin into its core treasury strategy. They've essentially provided a practical blueprint.
How to actually do it.
Great. From the initial decision-making and acquisition, through the ongoing accumulation, right down to the transparent public reporting via SEC filings, this whole process has a profound legitimizing effect on Bitcoin itself.
Yeah.
Well, when a prominent publicly traded company like Strategy has such an unwavering and so far very profitable Bitcoin strategy, it inherently contributes to the overall legitimization and mainstream acceptance of cryptocurrency as a potentially legitimate asset class. It helps Bitcoin shed some of that earlier reputation, maybe as just a speculative toy, or worse, a dark web currency. It brings it squarely into mainstream financial discourse.
Yes. It transforms Bitcoin from something maybe those tech people invest in to something a serious corporation like us could potentially consider. And the transparency you mentioned, the public filings disclosing holdings, cost basis, that adds another layer of trust and understanding for a much broader audience, right?
Absolutely.
It makes Bitcoin a topic of conversation in actual boardrooms, not just on crypto Twitter or Reddit forums. And for you, the listener, it provides this incredible real-world case study for how a bold, conviction-based strategy can actually play out over years.
And this naturally raises that really important question. Will more companies follow Strategy's lead? Will they start opting for Bitcoin, maybe as that hedge against inflation, or as a strategic growth asset on their balance sheet?
The million-dollar or maybe billion-dollar question.
Exactly. If we connect this to the bigger picture, it could signal a really fundamental shift in how corporations view and manage their capital reserves. We might be looking at a future where treasury management isn't just about dull old cash and bonds anymore, but about a more diversified portfolio that strategically includes digital assets. Strategy's success offers a powerful argument that the future of corporate treasury management might look very, very different from its past. It really encourages listeners, I think, to consider, is this just an anomaly, a unique success story driven by unique timing or Saylor-specific, maybe unrepeatable conviction?
Or is it the start of something bigger?
Or does it represent the vanguard, the leading edge of a larger systemic trend in corporate finance? Perhaps driven by things like continued inflation, the search for uncorrelated assets in a complex global economy. It's a huge question.
That's a truly thought-provoking idea. Is this the dawn of a new era for corporate finance? The numbers Strategy has put up and their sustained commitment over 5 years. They certainly make a compelling case that it could be.
The next 5 years will be equally fascinating to watch.
Absolutely. So let's recap. We've unpacked Strategy's really impressive 5-year journey with Bitcoin. We looked at their latest acquisition, the context around that, and Michael Saylor's just incredible, unwavering conviction. We've seen how their consistent long-term Bitcoin accumulation that never stop buying mantra in action has led to truly astronomical returns so far and established them as the world's largest public holder of the assets.
What a feat.
This deep dive really highlighted the strategic depth behind that seemingly simple mantra, even considering some of the market disappointment over the size of their latest, relatively smaller purchase. We've explored the profound implications of their strategy, from legitimizing Bitcoin in the eyes of institutions to potentially reshaping the entire future of corporate treasury management.
So given Strategy's sustained accumulation, their 5-year track record now, and Saylor's incredibly bold long-term predictions like Bitcoin hitting $21 million someday, what does their pioneering strategy really suggest about the fundamental nature of corporate treasury management, especially in a world that's becoming increasingly open or at least aware of digital
Yeah,
assets?
what's the big takeaway?
What if this isn't just an outlier? What if it really is a glimpse into a new financial paradigm for corporations? And if that's the case, what would that mean for the broader financial landscape as a whole, particularly for how companies everywhere safeguard and try to grow their capital in what feels like an ever-evolving, often uncertain global economy? It's something worth pondering.